Okay, everyone, let's start. We are now starting with chapter number 11 revision. This is called as Ethics and Terms of Audit Engagement. Very easy chapter. Again, I always put this in the easier category. Always remember chapter number 1, 2, 6, 11 are mark grabbing chapters. Okay. Question on this, if it comes in the examination, the marks should be in your pocket. These are the easy scoring ones. If these chapters are weak, then God will also not help you. Okay. You understand here that these chapters should be very, very strong. Okay. Let's start with this. Everyone, please hear. In this, we have three areas, as you know very, very well. We know part A. Part A is in relation to ethics. We have part B. Part B is in relation to SA 210, that is agreeing the terms of audit engagement. And we have part C, I should say. Part C is in relation to SA 220, and it also has SQC1. This is basically the coverage of this chapter, part A, part B, part C. How is the question lined up here? Part A, they can ask you any one of the 7 questions in the examination. Part B, 5 are there, and part C, 8 are there. So in total, this chapter has 20 potential questions that can come in the examination. Okay. Let's start it one by one. Let's get it going. Please here. First is meaning of ethics. Very simple. Meaning and need of ethics we'll complete first. Very simple area. Let's wrap these small ones first. Ethics means moral principles which govern a person's behavior. It deals with moral principles. Science of morals in human conduct is covered in ethics. Okay. What is the need of ethics? Human nature being what it is, a man often places his personal gain above service. So who are known to be the so-called great people who put public good over their personal gain. We had done the example of Ratan Tata sir here. That was a person enjoys respect and honor when they think about the public good here. Okay. CA should also abide with ethical behaviors. They have to follow fundamental principles of ethics, which we'll see in the coming answer. Okay. Copy is the code. We'll see that. That is your question number 1. Question number 2, we had done a nice concept called principle-based approach versus rules-based approach. In this, we did some intense discussion regarding, is following the law enough or should we follow common sense? Following the law only is not enough. We have to follow common sense also. We had done a discussion between rules-based approach, that is law, and principle-based approach, which is based on common sense. I had given the example of that scooter that uncle is riding, and uncle's scooter falls off, and you just will not say, oh, red signal has turned green, let me go ahead with my scooter or bike. You will not do that. You will follow the law, of course, but because your uncle needs help, you will apply your common sense. Stop your bike or scooter, help that uncle get up so that he recovers from his injury. You applied common sense because you normally, of course, have to follow the law. But sometimes you have to apply common sense and ask yourself, what am I doing is the right thing or not? Okay? That is principle-based approach versus rules-based approach. Now, let's see this. Principle-based approach is that it requires compliance with spirit of ethics. It requires to exercise the auditor's brain he should use, professional judgment he should use in every situation based on the professional knowledge, skill, and expertise that the auditor has. What is a rules-based approach? It is strictly following clearly established rules. Strictly following that. It may lead to a narrow outlook and spirit of ethics may be overlooked. It is somewhat rigid, and as it may not be possible to deal with every practical situation if you just keep following the law. Hence, they have given a conclusion that it is necessary that spirit of code is followed. That is basically principle-based approach is better than the rules-based approach. Are you there with me, yes or no? This is our question number 2. Okay. Let's go to question number 3. Then what is question number 3 here? What are the fundamental principles of ethics? We have done a code called copy. Simple. Confidentiality, objectivity, professional competence, professional behavior, integrity. What is confidentiality? To keep information secret. Don't let the information go out unless the client has permitted to give the information, then you can give, or it is required as per law. Okay? Objectivity basically means unbiased approach. Whoever is there in the company, even if you know that person very well, still if that person is involved in fraud, you should report the fraud. There should be no biasness here. Third, professional competence. Auditor should always keep himself updated with the latest knowledge regarding his field. Professional behavior, the auditor should first of all himself comply with the laws and regulations which are there. And last is integrity. Auditor should have a sense of truthfulness and straightforward and honest approach when he does the work. Okay? That is basically fundamental principles of professional ethics is our question number 3. Let's do, my dear students, question number 4. That is independence of auditor. Superb area. Independence basically means nobody should be able to influence my decision making. If I want to give a clean report, I should be able to give a clean report. If I want to give an adverse report, I should be able to give an adverse report. If I get influenced by others, in that case, I am not an auditor who is having independence as a quality. Auditor should always be independent. So let's see this. Independence implies that a judgment of a person is not subordinate to the wishes or direction of another person. So my judgment, my opinion is not subordinate to someone else. I am my own ruler. That is basically what is independence. Who might have engaged him or to his own self-interest. We did two things: independence of mind, independence of appearance. Independence of mind basically means the auditor should not allow his decision to get influenced by any situation. I had given that boy and the girl example, they fall in love. That example I had given. The boy could not report the fraud against the girl because he loves the girl. So he'll not be able to report it because he's in the accounting department, he's in the audit department, and now she's having a soft corner in his heart, which is he has become too sympathetic towards her. So now even if she's involved in fraud, he will not report the fraud, which is the wrong thing. That is called as independence of mind. So any situation because of which your brain has got influenced, because of which you are not able to give any opinion that you should ideally give, that is called as independence of mind is not there. Okay, so you should have independence of mind. Please here. The state of mind that permits the provision of an opinion without being affected by influences, that professional judgment, allowing an auditor individual to act with integrity, that is honesty. Objectivity means unbiased approach, and professional skepticism is, you know very well, quack. Quack means what? Tell me. Questioning mind, alert to condition, critical assessment of audit evidence. Auditor should always be able to do work with questioning mind, alert to conditions, and do in-depth checking of audit evidence, critical assessment. Easy to understand this part here, okay? Let's do independence of appearance. Superb discussion area. This is one of the best. Independence of appearance basically means what? In the eyes of the third party, the auditor should always appear to be independent. I should never be seen that I'm on management side. I should always be seen that I'm on auditor's side. Always. I give you the example of my best friend Kunal. If I'm doing the audit of his company, can I take up the audit work legally? The answer is yes. But if I take up the audit work, the problem is that because he's my best friend, in the eyes of the shareholder, even though I am doing the audit sincerely, if there is any fraud, I'll report the fraud against him. Still, because I've taken the work in my best friend's company, in your eyes, you feel that I am now on the management side, not on the auditor's side. You understand here? Auditors should always appear to be independent in the eyes of the third party. That is called independence in appearance. Are you there with me, yes or no? The third party shareholder should never feel that auditors' integrity, objectivity, professional skepticism has been compromised. It has gone low. That they should never feel. Are you there with me, yes or no? Okay. This completes our question number 4. That is basically, question 4. Independence of mind, independence in appearance. Okay. Let's go to question number 5. That is your professional skepticism. Let's do this. What is professional skepticism? Let's start. It is quack. Tell me. It is an attitude of questioning mind, alert to conditions, and critical assessment of the audit evidence. Okay. We had done a song. Professional skepticism will help in relation to which matters. We had done a song. Very simple song. दिल है छोटा सा छोटी सी आशा, दिल है छोटा सा छोटी सी आशा, मस्ती भरे मन की na 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 na. That was the tune. Okay. We fit our lyrics into it. Let's see this. Unusual circumstances, specific conclusions, appropriate assumptions, includes being alert to documents reliability, evidence contradictory, fraud possibility. Circumstances for AAP. Dil chota sa, choti si asha. It goes in that tune. Simple. What had we seen in this? We had seen that auditor, if he maintains a questioning mind, he can identify things which are not in sync with the company properly. Circumstances are suggesting something, and he feels that something else is being shown. That is called unusual circumstances. Specific conclusions. Auditor will give more specific conclusions, not generic conclusions. He will give the conclusions with more clarity. It will be more specific. Example, he will not say accounting department, entire accounting department is not working properly. He'll say accounts maintained by Mr. A and account maintained by Mr. B. There is a difference. Mr. B is making a lot of mistakes. Because he's working with alertness, he can point out the specific conclusions, specific mistakes. Appropriate assumptions. Auditor can take right assumptions because he has a lot of clarity regarding how the client's documents are given because he's having alertness. Auditor, we can easily question the document's reliability because he's paying attention. So auditor will come to know what is fake, what is real. He's not supposed to know, but he can easily identify that, okay, this is proper or not proper. Auditor will easily check evidence which are contradictory. One evidence showing something, second evidence showing something. Auditor can easily pick that out. Then fraud possibility. Fraud possibility. If you're alert, you can find more frauds. And finally, surveillance for AAP means auditor will come to know when the line goes up because he's alert. Hence, he can do more audit work to bring the line down. People understand this area? This is question number 5, professional skepticism. Next one, excellent question, which is one of the expected things in the examination always. That is threats to independence. Let's start. Threat to independence is any situation that does not allow the auditor to give the opinion that he should ideally give. That is basically covered in this. Let's start with this. In this, we see theft, self-interest threats, self-review threats, advocacy threats, intimidation threats, familiarity threats. SAIF is the code. Saif Ali Khan's SAIF. Okay, S square AIF. That is a code. Okay, let's start. S is self-interest threat. Let's go for it. We had done a code inside this also. This was B, C, D, E, F, G. B, C, D, E, F, G. Very simple code. B is business relationship. C is contingent fees. D is dependence on client's fees too much. And E is employment with the client. F is financial interest, that is holding shares in a company. And G is guarantee or loan. But I told you in the class while teaching that B, F and G are already covered in law. Threat was there, but lawmakers have made the law in such a way that the threat is covered now. So B is covered by section number 141, subsection number 3, clause E, which says that auditor will be disqualified if he has any business relationship. This you see in Audit and Auditor chapter in law. Similarly, financial interest, auditor cannot be a shareholder in the company, given in 141, subsection number 3, clause D, subclause 1. And auditor cannot give any guarantee exceeding 1 lakh or he should not be indebted to the company of exceeding 5 lakhs. This is covered in 141 subsection number 3 clause D, subclause 2 and 3. 2 covers loan and 3 covers guarantee. 2 covers indebtedness, 3 covers guarantee. Easy, simple. Let's go further. Now we are now doing self-review threats. In this case, I told you that this part is covered in section number 144 of law. So it means that if the situation arises in such a way that auditor only is doing the activity, auditor is only checking the activity. The person who is doing it is only checking it. It is called as self-review. It is called as self-review. That is called as self-review threat. Self-review. Okay. This you mainly see in law section number 144, the area which I have marked in bracket. Second situation of self-review can be this, which I give you an explanation in this manner. See this. Mr. D is the finance director of the company from this period to this period. Here he resigns from the company and joins ABCD and ABC as the fourth partner as D. If in the company's AGM and they are ABCD is appointed as the new auditor, and suppose Mr. D or any ABCD also comes to do the audit, you will understand. Mr. D was checking has made the accounts for this period. He's the finance director, so he's in charge of the accounts. And now he'll check the accounts for this period. So you understand here, there is overlapping. The person who is making it is only checking it. Person who is making it is only checking it. That is called as self-review. It is called as what? Self-review. Self-review threat. Yeah. Let's go further. Then we did advocacy threat. Advocacy is similar to independence and appearance only. The client, the shareholder should never feel that auditor is on the management side. They should never feel. If they feel that the auditor is on the management side, in that case, gone. Then the shareholders will not be able to trust the auditor. So the shareholders should always feel that the auditor is advocating for them and not advocating for the management. That was this. I had given you the example of there are 3 partners. That is myself, there is Manoj, and there is, let's say, Adarsh. We are the 3 partners in this case. I handle audit, they handle tax matters. The client has appointed us to handle a tax case in which if we win the case, the client is going to pay us 50 crore rupees. Audit work, client is paying us 5 lakh rupees. For tax case, they'll pay us 50 crore rupees. In that case, if we take up that case work, the shareholders will feel, oh, Kartik sir's audit team will never ever report honestly. They'll always give a clean report, because if they report any fraud regarding the client will take away the tax case from them and give it to some other CA firm. So in the shareholders' mind, the switch has happened. The shareholders feel Kartik sir's CA firm is not working on our side; they are working for the management side. That should not happen. The shareholder should always feel that the auditor is advocating for the shareholders and not for the management. Okay? That is basically this. The shareholders may believe that the auditor's objectivity, unbiased approach is getting compromised. Next, intimidation threat. I'd give you that dhamki. Dhamki means threat. You give a adverse report, you kidnap your daughter. Okay, all those examples. This was your intimidation threat. The auditor is stopped, deterred from acting objectively. Okay, that is basically this example. Next, we did something called a familiarity threat. We discussed this in great depth. I told you again, these two are covered in law itself. Auditor's close relative working in a senior position in the client company is a threat of familiarity. Threat is there, but it is covered in section number 141, subsection number 3, clause F says that your relative, if they are working in higher position in the company, especially in the position of director or KMP, you cannot be the auditor of that company. Okay. Next is long association between auditor and the client. This is broken by the Companies Act by giving a concept called rotation of auditor, which applies to certain companies. If you're doing the audit of certain companies, rotation of auditor will become applicable. Next, any acceptance of gift or hospitality. If the client pampers you with gift, it means they are creating a environment where eventually you'll become too sympathetic to the client's interest. They're creating a soft corner in your heart by pampering you with gift. Never accept the gifts, because later on, remember, whatever gifts you accept, if you find a fraud, you will not be able to report the fraud against the persons who gave you the gifts. And last is partner becoming a director or senior employee of the client. This example we have done here. Please look here. PQRS was a firm in which R leaves this partnership firm and he joins the company as the new finance director here. So he joins the company here as the new finance director. These four partners who were there earlier, they were college friends. They were very close with each other. S has gone and joined the company. Now, in the AGM, what happens is PQR is appointed as the new auditor. Do the partners of the CA firm know the director of the company very, very well? The answer is yes. Can they do fraud together? The answer is yes, because they are too familiar with each other. This is called familiarity threat. It's called familiarity threat. That is basically this. That is, you can see here, partner becomes a director. Partner becomes a director. Remember, in this example which I gave you, in this self-review threat example, director is becoming a partner. Director becoming a partner. In this case, my dear student, partner is becoming a director. That is how it works. Okay, this threat to independence. Then we did the last one in ethics part, that is a part A. In that we did something called as you know, that is safeguards to independence, in which we did a code called CCCKD. Just a second. Let's see. What are the safeguards to independence the auditor can take? He should consciously consider whether he is doing the right thing or the wrong thing. He should have credible and adequate safeguards in place. For the auditor, it is most important that the public should have confidence in the quality of audit. The auditor should always have key fundamental principles in mind, that is integrity, objectivity, and of course questioning mind, that is professional skepticism. And auditor should either not accept the work or accept the work with safeguards, that is, see, desist from the task, don't do the task, or you put in place safeguards, So we had this code called CCCKD. Are we there here, yes or no? This completes 7 questions of ethics.